Good evening. Ira Epstein for this Thursday evening, May 29th, 2025, about 6:25 p.m. Central Time. So we start off right now with the markets a bit down, metal markets basically lower. The dollar got absolutely annihilated today, down another 57 points. And I warn you, if this market gets much under the 98 level, I get very concerned. That's a fourth price count, and if you start accelerating from there, the fifth count is almost 8-9% lower than that. And that's, while it's not a high probability that it goes there, once I've seen these things take on that life of their own, they do. I mean, I've seen it in coffee. I saw it in sugar recently. There's a bunch of markets it's done it in. And it's rare, but when it happens, it's powerful. Most of the currencies tonight, they're very quiet if you're watching what's going on. What we have is tomorrow we're going to get the personal income spending and PCE index data for April. You know that that's one of the favorite indexes that the Fed watches. The May Chicago Purchasing Manager Index will come out tomorrow at 8:45. University of Michigan's final May Consumer Sentiment Index will come out at 9. We'll see if that changed as the month went on. And Atlantic Fed President Bostic will be addressing a Council for Economic Education around 11:20 in the morning. Goolsbee spoke today a little bit. I covered it in my newsletter as well. And in my newsletter tonight, I go through something that most people don't even know are in the tax bill. It's a Section 899. I'll leave it at that. Find out what it is and start reading the tool that it gives the president. It could be a big negative for people that want to buy U.S. bonds and notes. Okay. Notice I've moved gears to the September. This is the changeover, and in Bitcoin, I've moved to the June. So now the changes are there. Soon we'll be getting rid of the Junes and the stock indices, certainly in the currencies that'll be coming up, but we're too soon right now. The open interest is still trading that rather aggressively. When we look at the gold market, it's really gone nowhere for about a week and a half, 2 weeks. Take a look. You're just back and forth in here. You can almost see a line to connect down and one to connect up. So you're forming like that. You're forming just like that. You break out of those patterns one way or the other. When we come to the daily chart, you can see the action's a little bit different right here. The pattern on the chart is still one of higher lows and a higher high. That legacy's still at work, but we haven't stopped fighting. Just as I pointed out to you day after day, at this 18-day average, the market is winding itself up. And as it does that more and more, often what it does is it causes sooner or later these Bollinger Bands to start moving in as volatility comes out of the market. And that's basically what you've had. Don't get me wrong, these ranges, some of them have a 100-point range. That's why the bands are staying flat. But if it keeps narrowing, you won't get that. You know why gold's moving so much? One moment, you think you're fine. The next moment, oh, we got tariffs coming off. What does the market do? Gold goes crashing down, no tariffs, no inflation. Now it comes back as well. Wait a minute, we have a pause on that. Maybe that is still inflationary. What the president did is his team ran to the appellate court. The appellate court gave until June 5th to the plaintiffs to give their case, and June 9th, the president's side will come in with what they do. From there, if the president doesn't like it, he has the right to go to the Supreme Court and ask them to make a change on that. We'll see which way the appellate court goes with this. As you take a look, you're getting overbought. So I have a market that, while it's in an uptrend with upside bias, it hasn't been able to go anywhere recently. It's getting overbought. We have the gold-silver ratio that is staying underneath the 18-day average. And what that means is the bias is down. Bias down means, in theory, the lower you fall, the less ounces of silver you have to get up to get 1 ounce of gold. Another way to look at it is silver takes on more value than gold on a relative basis, if that does it. Silver keeps coming down to the main supports. You tell me it didn't do it again. It's been doing it on a regular basis of the 100-day average and the 18, and the market is overbought. There are traders that think maybe this is where the silver starts catching up to where the gold goes. I don't see anything here yet. I see a market that has the swing line down, the bias up, and it's overbought. I'll let other people want to throw their money at that. In the copper market, it's a similar story. Look at how you've latched on to this 18-day average and the 100 in green, and you're just drifting upwards, downwards a little bit, but really going nowhere. In the platinum market, now you've got a market that has an embedded set of readings. So on breaks, I think the trade is continuing to buy. I think they'll come out of the red line, which is at 81.81, settles under 79, then I think they'll call it a day in that, and they'll say, okay, maybe the market has to pull back to the 10.28.90 or wherever the 18-day average is. But until that occurs, the target seems to be the 11.18 area. In the dollar rallied on all this news, the confusion of the news of the stopping of tariffs, got up overnight 141 and dropped 130 points. That's a monster move in the dollar index. And where did it fail again? The 18-day average of closes. So the market's not trending right now because of that. It's oversold, but the bias is down. This has been one violent week for trading in currencies, and I've seen that what's happened to people. And you know, there's a time where you walk away from all that. I don't walk away from a lot of things, but I don't also like to stand on a train track and see if I can dodge. I want to remind you, we have our guide to technical indicators. You just see me right now talking about all these lines, what the markets are doing. We have two volumes. One with the type of charts. I like bar charts. Some people like candlestick charts. In the old days, it was point and figure. I was raised on point and figure. I had a gentleman who's long gone, but he was a point and figure advocate, and he was right a lot. His dilemma was the market had to go there, and it never made him the success he should have been. You've got to realize you get a move. There's a point where he wasn't applying, I know it, he wasn't applying relative strength, MACD, stochastics, whatever it is. But you learn what all these things are with it. You know, it's free. So you go to iraepstein.com. You'll see you can click our name and everything right above you. Give it a click, get over to the website, and under free offers. Can't be any easier for you. I'm Ira. You have yourself a great day. I'll catch up with everybody either in the other videos tonight and or the morning video. You take care.